Hey traders, Steven here with TradesPlan.com. It is Friday, March the 4th. We're going to look at the overall market, the S&P 500 and the Nasdaq, and then we're going to look at the top ETFs of the week, see which ones are setting up. Some of the commodities are getting extended, so let's just kind of have a look. So right now I'm looking at the S&P 500 and the overall market in general, and I'm really paying attention to the peak line, which is the 20-day moving average. Right, the 20-day exponential moving average. Now, in strong markets, when I say strong, I mean to the upside and the downside, it tends to find support, right? You can kind of see it just kind of rallies above that line. You can kind of see over here, like it'll find support. It'll also find resistance. You can see a lot of times, like it'll move above the line once, it gets slammed, moved above the line, kind of chopping around, a little bit more resistance, and then yesterday on Thursday, March the 3rd, it hit resistance, and then this morning is kind of selling off a little bit. So I think right now I would be incredibly cautious really until this gets taken out, or unless we have another one of these where you kind of just, it comes down. Oops, let me kind of grab that. Yep. I think my mouse is having problems. Kind of comes down. Maybe we get another one of these reversal bars right here. But it got rejected yesterday. Not a great sign. Little fall through to the downside, but it could just chop around for a while. Or it could do this, or, on Monday, it could absolutely gap up. But kind of until that happens, I would really be cautious on playing any non-commodity trades, because right now commodities are just kind of what's moving. A lot of the more aggressive U.S. industries they're not the greatest investments right now. So you just kind of want to be cautious and really be selective. The good thing about this kind of market is there are things that are going up, right? Oil is going up, commodities going up. That's not good for our pocketbooks, but it's good for a trade. So let's look at the Nasdaq. The Nasdaq is down a lot more than the S&P 500. We are in death cross mode, which means the 50 goes under the 200-day. With that right there, and we kind of have this, kind of zigzag down, which looks like a double bottom with a buy point right here. But again, I will go back to the pink line, which is the 20-day moving average. We're getting rejected at that line really 1, 2, 3, 4 times. Eventually we'll break through, but I don't know if we're going to do this. I don't know if we're going to do this. Or I don't know if Monday we're going to do this. I think there's just so much headline risk out there that we really don't know. So I would just continue to really take trades in the industries that are working, mainly commodities, and kind of focus on that, because that's just, those are the best trends right now. So if I go to the ETFs and I say, okay, what's the top ETFs of the week? Wheat. This is crazy because wheat's up, 37% this week. And the futures, wheat futures are up a lot. So this is going to be up a lot more. Now, what's funny, and I'll be the first to admit I'm wrong, a couple weeks ago when this bar right here, this bar broke out of this pivot right here, I literally said, I try to trade wheat, and I'm not really getting that mega trend, right? It's just kind of wearing me out, making a little bit, not a lot. So I said wheat is just kind of boring. It's hard to trade. And I said that on this breakout bar right here. And then, man, look at what happened. And, got a little egg. I placed a buy rating on this. So if you bought it, you're happy as all can be. But I think this is a great case study and classic example of sometimes trades will just wear you out or just not really get any headway. Maybe you win a little, maybe you lose a little. It just can't catch that big trend, and by the time you're ready to throw in the towel, boom, it just absolutely goes off. And wheat up 37%. It's going to be up a lot more, when the market opens today. But that's extended, so don't chase that. But you can kind of see we're just really filled with commodities this week. So if you kind of look at this, this whole entire list, you can see just filled with commodities. There's really nothing non-commodity related. I'm just sitting here kind of scrolling through here as far as the top ETFs of the week. There's nothing non-commodity related. Let's look at, is that palladium? So I'm trying to, so the idea is like, hey, let's find stuff that isn't as extended as oil, right? Oil and wheat, those suckers are gone. I'm glad I bought some stuff and still own it a few weeks ago. maybe a month ago. So like palladium, for example, like this is starting to get strong. So with something like this, I'd see if it can pull back. Right now it's 14% up, 14% from the breakout zone. So you got to let it pull back. That's extended. Let's just kind of look at oil for a second. So yesterday you kind of had believe it or not, kind of had an ugly reversal, right? So this is what I call melt up mode, where you kind of have that 45-degree angle up, like it's already in a strong uptrend, and then it just oil just accelerates to the upside. We're looking at USO right now, which is oil futures. So usually when you get into melt up, they can last more than a couple days, okay? But eventually that sucker is going to pop. So what's really interesting right now is you have some energy stocks that are strong, but honestly, as far as broad participation goes in energy and oil stocks in the U.S., the actual commodity is stronger. And, one interpretation of that is if the oil stocks aren't up as much as oil as for most of them, it could just be that, the market is pricing this in as a very kind of short-term accelerated to the upside move, right? That's just, one analysis. There's probably several other out there, but with oil, if you don't already own it, I definitely wouldn't chase it in this kind of melt up period right here. So let's just kind of keep looking a little bit. You have metals and mining. Ooh, that's extended, right? It's up 21% from this pivot right here. So we're just kind of keep going down. I know corn and all this stuff. Corn is probably about to accelerate to the upside. First Trust, natural gas. Yep, they're all just gone. Uranium is getting slammed pre-market. This is a really, really nice breakout to a downtrend. And there's a lot to like on this. I talked about this last week. Broke out of a downtrend, broke out of a horizontal, and it's getting slammed pre-market. Maybe that has to do with the nuclear power plant, in Ukraine that just got seized. I'm not sure, but I would just kind of let that one play out. So let's just, and this is kind of a lot more of the same. But, precious metals, let's look at some stuff that maybe isn't extended, right? Gold. So gold has been really, really interesting. Let's look at the weekly chart. Let's just look at GDX. Gold is breaking out, probably already has. You could make the case it already has broken out of a long, long downtrend. Right there, you could call this one giant bull flag, but honestly, if the flag is longer than the pole right here, probably not a bull flag. But let's just kind of look at this for example. So it's grinding its way through this 35 level, which on GDX, which is clear. You probably have an inverse head and shoulders pattern right there. That's an ugly draw, but it's breaking out above the neckline. Right now, and it's moving higher. This is about 10% above the 200-day moving average, which is this black line. I would think this is still a buy. Like, if you still believe in commodities, I would say this is a buy, which is kind of a stop just right under this line. Precious metals have been the laggard. Out of all commodities, precious metals have been the laggard. They could play catch up. So if you're looking for a commodity catch up opportunity, because base metals are gone, agriculture's gone, energy's gone, this could be the play. So this is kind of looking interesting to me. I bought this a week or two ago, kind of down here. I think I actually bought it on this day. So I'm up a little bit. It's had some ugly reversal bars right there, but it's gold. Like, when it comes to gold miners, I do not try to overanalyze on a day-to-day basis because it's just so volatile. But if it eats its way through this reversal bar, I think this could easily get up to $40. Okay, so this is one chart that is probably the most interesting. And let's just look at one non-commodity ETF. Or we'll look at a couple that are looking interesting. Bug, this is still looking interesting. I talked about this last week. Resistance, right? Resistance, support, resistance, breakout above the 50, the 200-day. This is also one I would probably watch. I already own it. Sold half, raised stop to break even. But I'm trying to hang in there. I'm hoping this holds up if the market, has some choppiness around. But to me, this still looks pretty good. If you can get it under 30, that'd probably be great. If you can get it kind of as close to down here as possible, so maybe let it pull back a little bit, see what the market does on Monday. But I would definitely continue to keep bug on your watch list. There's also one other ETF that looked interesting, XLU, and I'm not a utilities guy. This kind of reminds me of wheat, just kind of a zigzag, kind of a slow grind its way higher. But, all of a sudden this week, this utility ETF, you had a reversal pattern last week, which the market had a reversal pattern, but it's really outperforming this week. So that honestly could be a trade. The utilities ETF, if you're looking for something non-commodity related, probably with just a very, very tight stop, like 4 or 5% stop loss under the low of this week's candle. Like, we don't want to let it roll back down, but it's really starting, the relative strength line is really starting to increase. Okay, and I'm not one to just buy utilities if that's the safe haven. Sometimes I'd just rather be in cash. But if it's looking like the trend could be strong, then I'm paying attention. Okay, so, and all of a sudden the last 2 weeks, it's been outperforming on the downside, outperforming on the upside, and it's breaking out of this double bottom right here. So right now I would really keep my eye on gold miners, utilities, and I'd keep my eye on Bug, the cybersecurity ETF, because that looks like it could pull back a little bit, but I doubt that's going away.